The world didn't wake up to explosions. It woke up to silence, screens glowing, and markets holding their breath. After the US-Iran conflict, the real war moved quietly into the global economy. Stock markets open, but confidence does not. Charts flicker between red and green, as if the world itself is undecided. Investors are not panicking yet. They are watching, waiting, calculating the cost of uncertainty. Then comes oil, the lifeline of the modern world. Every trader's eyes drift toward the Middle East. The Strait of Hormuz becomes more than a location on a map. It becomes a question mark hanging over the global economy. Oil prices rise, not because supply has stopped, but because fear has entered the market. And when oil rises, everything follows. Transport becomes expensive. Manufacturing costs creep upward. Food prices feel heavier. Inflation doesn't announce itself. It slowly eats into daily life. Here's the twist. The war isn't global, but its price is. From Europe to South Asia, governments feel the pressure. Central banks hesitate, cut rates and risk inflation, or raise them and choke already weak growth. Every decision now feels like a gamble. Ships still move across oceans, but their routes change. Insurance premiums climb. Delays grow longer. Global trade doesn't collapse, it slows, and in economics, slowing can be just as dangerous. As uncertainty spreads, money looks for safety. Gold begins to shine again. The US dollar strengthens. Risky investments lose charm. This is how fear travels, not with noise, but with quiet shifts. Emerging economies feel the heat first. Countries that import oil watch their currencies weaken. Budgets tighten. Development plans pause. The conflict may be far away, but its economic shockwave hits close to home. Ordinary people don't track oil charts, but they feel the impact. A higher electricity bill, more expensive groceries. A sense that saving is safer than spending. Consumer confidence fades before headlines explain why. Businesses respond the same way. Expansion plans are delayed. Hiring slows. Investments wait for clarity that hasn't arrived yet. The economy enters a holding pattern, yet the world does not collapse. Markets adapt. Supply chains adjust. Energy alternatives soften the blow. This is not a 1970s-style oil shock, but it is a reminder of how fragile stability really is. Now the world waits. Not for bombs, but for statements. Not for attacks, but for diplomacy. Because today, peace is no longer just political, it is economic. The lesson is clear. Modern wars don't just destroy cities, they shake markets, reshape prices, and test how much uncertainty the global economy can survive. The war may pause, but its economic echo lingers, and until certainty returns, the world economy will keep walking on thin ice.